Oil. Spencer Welch is Vice President for Oil Markets at S&P Global. Spencer, welcome. Good to see you. So oil has jumped. Is this all down and only down to the United States and British military action against Houthi military targets in Yemen?
Hi, good to speak to you. So yes, oil price is up about $2, up to $79 per barrel. And really, that's the main identifiable reason for that. There's nothing else in terms of better economic data or better oil demand that's supporting that. So I think it's all down to the geopolitical situation.
For those who are not familiar with the geography or the oil industry, just explain to us why the Strait of Hormuz is so critical as this crucial oil passageway.
Well, around 12% of global seaborne trade goes through the passageway, and around 7% of the world's oil supply. So a significant amount of oil supplying Europe, supplying oil refineries in Europe, which then make diesel and gasoline. So it's a critical sea passageway, and because of the increased risks, a number of shipping companies are avoiding the area, and maybe around a third of the normal transits through there are avoiding that route.
Those of us who are ancient, of course, remember this from before. I mean, how does the potential impact of this current situation on oil compare to the price shocks in the 1970s, and come to that, even the Ukraine war and its effect on gas markets?
If we first talk about the 1970s, it's a very different situation. I'm sure the world is an incredibly different place since then. From an oil perspective, the main difference is that there's a lot more oil production happening now in the United States, whereas previously in the 1970s, the United States was very reliant on oil supply coming from the Middle East. The second key point is that effectively the world's got more oil at the moment than it needs, and so over the last couple of years, OPEC has been deliberately restricting supply to support price. So there is a lot of extra available oil, and so the chance of a shortage is very small, and hence the reaction of the market is relatively small. If we then think about the Russia-Ukraine situation, the impact there was more on gas supply rather than oil supply.
Spencer, good to talk to you. Thank you for that. Spencer Welch, Vice President for Oil Markets at S&P Global.